Johnson & Johnson reporting earnings and revenue that beat analyst expectations. The stock is off by about 0.3% this morning. Joining us right now is Joe Wolk. He is Johnson & Johnson's executive vice president and the CFO. And Joe, let's talk through what happened, because for the quarter, you guys beat expectations both on the top and the bottom line. You did give some guidance about what to expect in 2025. Where do you want to start?
Sure. Good morning, Becky. It's a pleasure to be with you today. 2024 fourth quarter, I'd say, was a very solid quarter, 7% growth on the top line. Kind of fit in nicely with a very solid year with respect to how we were able to develop significant scientific advancements for patients in serious illnesses such as multiple myeloma, bladder and lung cancer, cardiovascular disease, mental health. It was really a banner year on that front. We were also able to generate $20 billion of free cash flow and consistently come out every quarter and meet or exceed the top line and exceed EPS every quarter. As we enter into 2025, there are some significant headwinds with respect to the top line, multi-billion-dollar headwinds. If you think about the China economy, which has been a source of growth for our medtech business, you have additional discounts and rebates due to Part D redesign. And then you also have biosimilar competition coming to the U.S. for one of our larger products, Stelara, that treats psoriasis as well as inflammatory bowel disease. Most companies would be retrenching or contracting their growth rates. We are actually confidently leaning in with 3% operational growth. We're able to do that because we've got 26 products or platforms that generate more than $1 billion in revenue and new ones on the horizon in the pipeline that I spoke of. And probably more impressively, when we get a chance to speak with the analysts later this morning, is 9% EPS growth on an operational basis. So we're premising that on about 300 basis points margin improvement. Some of that was a natural tailwind just due to the heavier investment we had in 2024 to secure the future, secure the pipeline. If there's any disconnect right now, it's really the foreign exchange that you mentioned, the swift strengthening of the dollar from just last quarter in Q3. It was about 1.10 ratio. Euro to U.S. dollar. Today, it stands at about 1.04. That's worth about $1.7 billion on the top line and about 25 cents on earnings per share. So we think once the analyst community has a chance to digest this, they'll see this not only as meeting expectations, but really a very healthy beat on the bottom line. But we're very confident going into 25.
That stronger dollar is going to impact every big international company.
It will.
I mean, it's a little surprising the street hasn't figured that out. If you've been watching Forex, it comes through kind of clearly. Have you?
Yeah, and Joaquin did a great job at the J.P. Morgan conference explaining it to the investment community. There's a lot going on. We wish the models were updated, but less than half the models were actually updated for that impact. So, again, I think once that noise kind of clears, I think you'll see some very positive sentiment around certainly the top line expectation of 3% growth, which we actually signaled back in 2023 when a product loses exclusivity due to patent. It's not a surprise to us. Yeah. We planned for it.
Let's talk about the slowdown in China, because that's a story that has impacted a lot of other big companies, too. Procter & Gamble's CEO is going to join us in just a little bit. Yeah. Last quarter, he warned about the slowdown that they'd seen in their China business. It was pretty significant. Is this an issue of the Chinese economy faltering, and therefore there's not as much money to be spent from consumers there? Or is this an issue where China is replacing U.S. companies' products with their own products?
I think it's a blend of both. So I think the big catalyst in China, specifically in our medtech business, is around volume-based pricing that they have. And because the economy has slowed down, the volume in some of the outlying districts for which those pricing agreements weren't covered didn't really follow through. If you look at our pharmaceutical business, that performed pretty well throughout the course of 2024. So it's largely a medtech matter. Our estimates going forward do assume, I'd say, a somewhat pessimistic outlook. But if that rebounds, that will obviously be a source of growth and upside for us going forward.
Joe, I know you were in Washington for the inauguration, as a number of business leaders were. What does this change in administration mean? I think through to things for the pharmaceutical companies in particular, the IRA, the Inflation Reduction Act. What do you think happens with that? What are the potential upsides and downsides with coming to a new administration?
Yeah, so Becky, by the way, great job of your coverage in Washington. It was exciting. You're there in a moment in time, a historical moment for U.S. And I would say, really optimistic about what could potentially happen with the Trump administration for the second round here. Pro-growth, pro-innovation, pro-business, pro-American business, I think are things that align very much with Johnson & Johnson's strategy. And I think about it from two perspectives. You've heard me speak on this show before about tax policy. We're very encouraged. We were proud to announce the addition of a new facility in North Carolina because of the Tax Act that was passed in 2017. That wouldn't have been possible a decade ago because we've got a 21% rate that is, I would say, not advantageous, but not a disadvantage either. So on a piece of paper, you can actually make a justification as to why you would add jobs and capabilities here in the U.S. And then I think about it from drug pricing, which is obviously a topic that's on the minds of many. And I hear the administration speaking about transparency around the middleman. Think about every drug spend dollar here in the U.S. More than 50 cents of every drug spend dollar does not go to the innovator or the manufacturer. It goes into the system. It goes to PBMs, insurers. And if you think about copays and insurance premiums, those out-of-pocket costs that the patients incur, they've gone up more than 50% over the last decade. We've got to get those discounts and rebates into the hands of the patients who need them most. There's things that can be done pretty easily with respect to copay reform, so calculating the copay off of net price versus list price. Having a transparent discussion around that, which is where the administration seems to be heading, I think is certainly good for the industry. It's good for business, and it's also good for America and America's patients.